All right, welcome to our explainer. Today we are tearing down the power of three trading model. Now this is the playbook that a trader named Kane supposedly used to achieve some pretty insane results. So we're going to break it all down for you step by step.
So, here's how we're going to do it. First, we'll cover the core concept, the power of three itself. Then we'll walk through the daily game plan. Next up, spotting that perfect A-plus setup. We'll follow that with how to master risk and reward, which is huge. And finally, we'll talk about the mindset you need to actually pull this off. Okay, let's jump right in.
All right, section 1, the power of three. This is all about understanding institutional order flow. So, what's the big idea? Well, the whole model rests on one core belief. The market isn't random. It's actually a deliberate process where large institutions, the smart money, are engineering price moves. Our job, it's to find their footprints.
And that brings us to the power of three, or PO3 for short. So I want you to just forget about basic support and resistance for a second. This model is all about seeing the daily price action as a three-act play. A story that institutions are writing every single day to build their positions and, well, to trap unsuspecting traders.
Okay, so check this out. This breaks down the whole process. First, you've got accumulation. This is when price just kind of consolidates, goes sideways. Orders are being built up here. Then, bam, you get the manipulation. This is that fake-out move, that sharp spike up or down that's designed to trap all the breakout traders and hunt for stop losses. And only after that, after the trap has been set, does the real intended move begin. That's the distribution. The whole goal here is to sidestep the manipulation and ride the wave of the distribution. Okay, section 2, the daily trading game plan. How do we set the stage for success? Look, knowing the theory is great, but how do we actually use it? A winning trade doesn't just happen. It's all about having a solid plan and knowing exactly when and where to hunt for these setups.
Now, this is super important. This is not an all-day trading strategy. No way. You are focused on a very specific window of opportunity, basically from 9:15 to 11:30 a.m. Eastern. Why? Because that's when the market opens, liquidity floods in, and it creates the perfect storm for these kinds of manipulative moves to happen. And you'll want to pay extra close attention right around that 10 a.m. mark. It's a statistically significant time for a potential reversal.
Okay, and here's what makes this whole thing so incredibly powerful. This PO3 pattern. It isn't just something you see on a 5-minute chart. It's what we call fractal. That's just a fancy way of saying the same pattern repeats itself on different scales. You'll see it on the hourly chart, the 4-hour, even the daily. The absolute best A-plus trades, they happen when all of these different time frames are singing the exact same tune.
So think of this as your daily mission briefing. It's your checklist before you even think about putting on a trade. You're asking, 1, does the daily chart look like it's setting up for manipulation? Check. 2, does the 4-hour chart agree? Check. And 3, as we get into our active trading window, does the 1-hour chart confirm the whole story? When you get all 3 of these lined up, it's like a set of Russian nesting dolls. That's your green light. That's the A-plus setup you've been waiting for.
All right, part 3, spotting the A-plus setup. These are the rules for entry. So the conditions are perfect. The time frames are all in agreement. So now what? How do we actually get into the trade? Well, we need very specific rock-solid signals. No guesswork allowed.
Your first major confirmation signal is something called divergence. Here's an easy way to think about it. The NASDAQ, or NQ, and the S&P 500, the ES, are like two climbers roped together. They should be moving up or down together, right? But what happens when one of them, say the ES, makes a new high, but the NQ just can't make it? It stumbles. That's a huge warning sign. It shows weakness. And that little crack in their relationship is often the first clue that a big reversal is about to happen.
The second piece of the puzzle is what's called an inversion gap. It sounds complicated, but it's actually super simple. Imagine a floor in a building. You're standing on it, it's support. But if that floor breaks and you fall through, when you look back up, that same level is now the ceiling, right? It's resistance. That's all this is. When an old support level breaks, it often flips and becomes the new resistance. And that gives you a perfect spot to look for an entry.
Okay, so let's put it all together. This is your A-plus entry workflow. It's a 3-step process, and you need all 3, no exceptions. Number 1, the big picture time frames. Daily, 4-hour, 1-hour. They all have to be in alignment. Number 2, you need to see that divergence between the NQ and the ES. And number 3, price has to break a key inversion gap to confirm the reversal. If you don't have all 3, you sit on your hands. It's not the setup. Simple as that.
Okay, let's move on to section 4, mastering risk and reward, or how to stay profitable. I'm going to be real with you. Finding a good entry is maybe half the battle. Maybe. The real money, the long-term success of this whole thing, it comes down to how you manage your risk. And honestly, this is where most traders completely fall apart.
This quote right here says it all. You either need to be right or right out. This is the entire philosophy. Because you're literally trying to catch a turning point in the market, you need that trade to work in your favor, like right away. If it hesitates, if it chops around, if it even thinks about going against you, you get out. Full stop. Get out at break even. There is absolutely zero room for hoping and praying in this playbook.
So what are we aiming for? A grand slam, a home run? Nope. We're aiming for just 50% of the previous range. That's it. This entire strategy is about hitting consistent singles and doubles. We're not trying to be heroes, we're trying to be profitable. Taking these smaller, high-probability chunks out of the market, that's what grows an account over time. And just as importantly, it keeps your head in the game. Now, this is a major mental shift for a lot of people. You have to be aggressive with your risk management. As soon as the trade shows a little bit of strength, you're moving that stop loss to break even. Why? Because in this system, a break-even trade is a win. I'll say that again. A break-even trade is a win. It's not a failure. It's a feature of the system. You protected your capital, and now you're free to hunt for the next great setup without taking a loss.
So, let's be real about the pros and cons here, because every strategy has them. The pros, yeah, you have the potential to literally nail the high or low of the day. It's incredibly profitable when you manage it right. But the cons, well, it's a reversal strategy, and that's inherently risky. You're stepping in front of a moving train. It requires an insane amount of patience, and you will have a lot of break-even trades. You just have to accept that as part of the deal.
And that brings us to our final section, number 5, the winning trader's mindset. This is about the who behind the strategy. Because look, you can have the most perfect, foolproof system in the world, but if the person clicking the buttons doesn't have their head on straight, it's completely useless.
Honestly, this is the final boss. It's not about the charts anymore, it's about psychology. It's about discipline over emotion. It's having the patience to sit there for hours and do absolutely nothing while you wait. It's about taking those reps, building that intuition. It's a total focus on the process, not the profit and loss. Your job is to execute the playbook perfectly. The profits, they're just the byproduct of doing your job right.
And there you have it. That's the power of 3 playbook, from start to finish. It's a clear, rule-based approach to the markets. But as this slide asks, you have the playbook now, but do you have the discipline? Because at the end of the day, success comes down to execution. It's one thing to know the strategy. It's another thing entirely to live it.